Fly me to the moon, let me play among the stars, and let me see what spring is like on Jupiter and Mars.
Welcome Bitcoin friends, it's Bitcoin Mamo. Today we're going to look at the Bitcoin charts. We'll do some more longer term analysis. We'll try to answer three main questions. Where are we in the cycle compared to previous cycles? Starting from the halvening date, the bear market low, and also the previous bull market peak. We'll also try to answer what level will the bull market top at based on previous cycle tops. We'll use tools like the Fib extension tool and also the RSI. And we'll also try to answer when will we know when the top is in. And we'll also incorporate market cipher into that one. And we'll also look at the modified pi cycle top indicator that you can currently see on the screen. So a lot of charts to get through. If that sounds interesting, stay tuned and let's get into the charts. So let's start here comparing the cycles for Bitcoin. In yellow there we have the 2013 bull run. In blue we have the 2017 bull run. And in red is the current bull run. On the x-axis we have the number of days since the halvening. And on the vertical axis we have the percentage gains. So we can see in yellow 2013 was a quicker cycle with a higher percentage gains. And we see 2017 in blue and our current cycle in red. We were ahead of the 2017 bull run here for quite a while till we had this mid-cycle pullback, and then we did drop below the 2017 bull run, and we have been slowly catching up here. And recently with this pullback, the 2017 bull run has pulled away and diverged a little bit. So we are yet to see the explosive end to this bull run in the current cycle. And we'll have to see where this current cycle ends up, whether it's below the 2017 percentage gains from the halvening date, or if it does end up catching up and perhaps even going a little bit longer. That was on the logarithmic chart, and this is just on the linear scale, just to show how explosive the end of the bull run here was in 2017. And we can see we are yet to get that explosive end. We are getting quite close to the number of days after the halvening before the peak when looking at 2017. And I think once we eventually break the previous all-time high in this cycle, we're going to see quite an explosive move to the upside. So now comparing all three cycles, taking it from the bear market low point, have 2013 in red, 2017 in blue, and the current cycle in yellow. This is on a logarithmic scale. You can see we've ticked over 1,000 days since that bear market low. We can see it is comparable to 2017. We have been above and below it several times here. And we do see around this time in 2017, we had one more pullback before coming back up and finishing off the bull run. So these do seem a bit more comparable here when comparing it from that bear market low. And we can see we have maybe another 50 days to do a similar time length cycle to 2017 if we were to top out at a similar time. Looking at it on the linear scale, you can see we are still waiting for that explosive end to the bull run. Now I want to look at it taking it from the previous bull market top. So for the 2017 bull run, that top was in 2013 at around $1,200, and in the current bull run, that previous bull market top was at around 20,000 in the end of 2017. So we can see they are quite similar here, and perhaps this one gives us the best comparison. And we can see we are quite close here to the 2017 bull run. And just zooming in, we can see how close we are here to that 2017 run. It did experience a dip here before going parabolic. And we did have one more dip along the way before really taking off here. And looking at it on a time-wise scale, if we were to do a similar length cycle, basing it from the previous bull market top, this would leave us with around 80 to 100 days left. And just comparing those on a logarithmic scale, zoomed in from around the 1200 day mark after the previous bull market top, and see how close we are here. Did actually get back on a similar track with 2017 here after the mid-cycle pullback recovery, and now we have been pushing higher and we are quite close to that 2017 run. So now looking at something called the Golden Bull Cycle, and for those that don't know, I'll just quickly explain it. We have this red line is the bear market low, the white line is the halvening date, and the green line is the bull market peak. We have it for all three cycles here, and this theory basically goes that looking at the amount of days from the bear market low to the halvening and comparing that to the number of days from the halvening to the bull market peak, we see a similar amount of days around that 50-50, 51-49% ratio. We saw that in that first cycle, even though it was shorter, and we saw a similar thing in the second cycle. And in the third cycle, from the bear market low to the halvening date, it did take 512 days. And initially we were postulating a similar thing with this section from the halvening to the bull market peak being around 500 days. We have gone past that date, and I did modify my opinion on this a couple of months ago, and my reasoning for that was that we did experience this stock market crash in March of last year, and I think we didn't experience this in any other cycle, and it did throw a bit of a spanner in the works compared to previous cycles. And I postulated that the recovery time from this stock market crash for Bitcoin to get back up to similar levels was around 54 days. So I think we probably have to add that to the end of the initial date here. And if we were to do that, that would put the bull market top date around 18th of November. But again, we can look at lots of indicators to know when we are close to the bull market top. And I won't be only relying on this. This is more of a model. But we will look at various things, try to get that date as accurate as possible. If we were to look at the 2017 bull run here, what we can see is just before the halvening, we did have a run up here, and then we really started taking off not long after that. And we can see just before the halvening here, instead of getting a similar price action here, we had that stock market crash and we had to get that recovery. So it seems like this section here around the halvening date in 2016, we did a little bit later here. And then we really started taking off a bit later compared to the previous cycle. So now I want to just look at these fib extension levels that I've got drawn here. And these are basically taking it from the previous bull market top to the bear market low. This is on the log scale, and these fib extensions are based on the log scale with this box ticked here. And just looking at the 2013 bull run here, we can see we topped out around that 2.272 level. Looking at the 2017 cycle, we topped out at the 2.414 level, slightly higher in comparison. And in this current cycle, we're looking for a target around a similar area. The 2.272 level is around 200,000. The 2.414 level is at about 260,000. We could also look at the 2 level in the case that we're not going to go as high as previous cycles, but I do expect us to come somewhere between that 2 and the 2.414 level. We also see a lot of similarities between this current cycle and the 2013 bull run here. We see we came up to that 1.618 level, got a strong rejection, came back to the 1.272 level, and then we did get back above the 1.414 level, came back for one more retest, and then we took off on the rest of the bull run. We will look at these in more detail, more zoomed in, and just looking at the current cycle, we got to that 1.618 level. We had a pullback to the 1.272 level, came back to the 1.414, went higher, did have a throwback to that level, and now we're pushing towards that 1.618 level again, which is around 60,000. So here is the 2017 bull run here on the left and the current bull run on the right. And they were quite different here. We are similar to the 2013 bull run, but on a time-wise scale, I think we're doing something similar to the 2017 bull run. And we can see here that 0.618 level. We did get above it before the halvening. We came back into it. Once we used it as support, the bull run started. We can see here, perhaps we were going to do that before the halvening, before we had that stock market crash. We had to spend time recovering here. We got above. We came back to retest that level once it was used as support. We took off on this bull run. So this bull run might take a little bit longer compared to 2017. Now comparing 2013 bull run here on the left to the current bull run in a bit more detail, we see a similar thing once we got above this 618 level and held it. After the halvening, we really started taking off on the bull run. We can see those levels compared a bit better here side by side. That 1.618 level acted as resistance in both cycles. We did go higher here and have a stronger pullback, whereas this one spent time at this resistance level and also time at the 1.272 level, and we're pushing to that 1.618 level, which is around that 60,000 area. So let's just zoom in on that mid-cycle pullback from 2013 and our current cycle and look at these levels in a bit more detail. So what we can see is once we did get that bounce from the 1.272 level, and we'll just zoom in a little bit more, we can see we came up to the 1.545 level and got a throwback to the 1.414 level. And in the current cycle, we did a very similar thing at that 1.545 level. We got a throwback to the 1.414 level. This isn't exact, but we did throw back to a similar level here. And then we got this strong bounce recovery. This one was quicker, this recovery, but we see we came to the 1.545 level and we pushed all the way up and didn't get resistance to the 1.687 level. And again, that's not a fib number, it's just to show where the top was and to use it as a guide on this current push. So perhaps we could see a similar thing where we don't get a decent pullback until we get to the 1.687 level, and that would be around 69,000. And we did get a decent throwback to 1.595 level, and if we were to put that level on this chart, that would be at around 58,300 approximately. So just using it as a guide as we did in this area here, did a similar pullback here, and we did do something similar here. We were slightly lower, but we could be looking at a similar thing if we came up to that 1.687 level and got a throwback back to the 1.595 level. So it would be something to watch here. So now I want to talk about the trend-based fib extension tool and using it to predict where we might possibly top out in this bull market, as well as the fib extension tool. When you just draw a line like this on the log scale, you'll find that the line does move and it adjusts as if it was on a regular scale. So we can use that tool to look at a similar move on a log scale. So it's a one-to-one move. And to do that, just go into this tool here on the right and select trend-based fib extension. So if we were to do that, we take it from the low here and we had this big run up, and then we go down to the low again, and this gives us the one-to-one extension. So what we can see, that takes us to around 189,000, 190,000, and close to that 2.272 fib extension level. And what we also notice is we're taking it pretty much from this 0.618 level and going to the 1.618 level. So applying that to the 2013 bull run here, we can see this run started taking off here initially, also at that 0.618 level. And we've applied this same tool here, measuring it from the low to the high, pretty much from the 618 level coming back to the low here, and it gives us this extension here to that 2.272 level, which was at 1133. We can see that we did top out pretty much around that level on this green candle. So it shows that this tool can be applied to this type of situation, and so we're applying it to the current bull run. And there is just a lot of confluence with both starting from that 0.618 level going to the 1.618 level and getting a similar pullback to the 1.272 level, applying that extension and coming to a similar fib extension level at that 2.272 level, which again is around 190,000. This is both bull markets here now. This is our current bull run here on the top. This is the 2013 bull run on the bottom. And we've got those same fib extension levels. And what's interesting, if you do line these up, starting from this 0.618 level, and we're choosing the highest point after breaking the 0.618 level, which was on the 13th of August 2012 in that cycle. And here was the highest point after breaking that 618 level. That was 17th of August 2020. So if we line these up, what we can see is we see similar peaks and lows. So this was the peak here around that 65,000 area, and it does line up with the peak here of this initial run in 2013 also. And then we did get that mid-cycle pullback here, and this low was on this white dotted line, and this low, discarding the low here on the initial pullback, was at a similar time here. This was a little bit earlier, and then the peak after that was on this white dotted line in 2021, and it does line up with the peak after the recovery here. And then we did get that small pullback, and then we finished off the bull run. And I've just got the end of that bull run marked here, which was around 25th of November 2013. And we're looking to do a similar thing here. And if we do line up these peaks and lows, we might expect that bull run peak around the first week of December, around 6th of December. But we could be a bit earlier, 22nd of November. This is the 2-week chart. As we can see, this doesn't line up exactly on all of these, but it does give us a bit of an idea as to when the bull market peak might be. And we'll have to see if we break that 1.618 level here at a similar time, which would be in the week starting the 25th of October. But I think personally we'll probably break it in this 2-week candle, but it's just an interesting comparison and gives us an estimate as to when this bull market might end. So now look at the Pi Cycle top indicator that I modified. And for those that don't know, the original Pi Cycle top indicator got the tops on the previous cycles within a 3-day accuracy. And I did modify it so that it did get the exact tops on the exact day. And just to quickly show you that, basically this is just 2 different moving averages, and when they do cross, it indicates a bull market top. So we can see this 2017 top here on this candle. It's when these lines crossed. The second peak in 2013 here on this candle, these lines also crossed. And the first peak in 2013, we can see it crossed on this candle here, which was also the peak. So I think this one is a bit more accurate. And what we actually found was we found 7 different solutions using different moving average values, and we were able to get the exact top on the exact day using 7 different sets of solutions of moving averages. And I did make a detailed video on this explaining all these moving averages, the exact numbers and the multiplier used. So we'll have that in the description if you haven't seen that video. So what we notice is with the current mid-cycle pullback, we got quite close to these lines crossing. And we can see we did get quite close here. Then we had this pullback, we went higher again, we had that big drop. So we never actually got the Pi Cycle top indicator to cross here, indicating that we didn't top out. And what we can see now is we did drop lower. We did eventually get back above the bottom moving averages here. And these are all the different solutions. So the blue lines are one set of solutions, green lines another, and so forth. And we've just got them all on here to show the spread. What we can see, we did go above here, and then we pulled back pretty much exactly to this ribbon, and we have had this bounce now. Now we can see it starting to curl up here, but for these to start crossing, we do need to get above this area. And when we do that, as we can see here, they start converging quite quickly. So to get above this area, we need to get above 80,000 currently, and this is moving higher daily. So there is that question that in 2013 mid-cycle pullback, this indicator did indicate a top twice, so perhaps it's not accurate. And that's a fair argument. And I think on this pullback here mid-cycle, we did actually have an 80% correction. And I guess it comes down to the definition of a bear market. Is an 80% correction a bear market? Or is this too short of a time to recover and put in a higher high? So it depends on how you will define a bear market. And there isn't actually a solution, as I did look for one, as to a set of moving averages that don't cross on this mid-cycle pullback, but do here, and also get the 2017 cross exactly. I was unable to find a solution to that. So I think this is as accurate as we can get this indicator. And I guess the real test will be when we do top out after making a new high here, as to whether these lines cross on that exact day and it does get it accurately. So that would be the test for this indicator. Again, I don't rely on this 100% as the only way to know when we're topping out, and I will look at lots of other things that we've already talked about, and also Market Cipher to know when we are topping out. But this is an interesting test to see how this performs with the modifications, as it was modified to fit the previous tops. So now moving on to a Market Cipher, and how can we more accurately predict the bull market top the closer we get to it. So we are going to be comparing again 2013 here. This was the mid-cycle pullback, and we're saying this is also the mid-cycle pullback on the current bull run. We'll be looking in detail at Market Cipher over various time frames, and we'll be looking at these two white lines here, where we started getting green dots on the daily and the weekly time frame before we took off to end the bull run. So those two white lines we showed in 2013 here. This is after the recovery from the mid-cycle pullback. This is where we started getting green dots on the 1 day to the 5 day time frame. And we're seeing a similar thing with the current cycle. So first we'll look at this area in detail when looking at the different daily time frames. And we'll be looking at using the Heikin-Ashi candles, which I prefer to use on Market Cipher, even though you can use both candles. We also have marked off here the bull market peak, and this was an area here where you could have got out after this pullback and recovery. So these are those initial two white lines here, and this was the peak here, this first white line, and this second line was that area you could have got out after that pullback. So what we can see after the mid-cycle recovery, this top area here is the 1 day time frame for Market Cipher. Then we have the 2 day time frame, the 3 day, the 4 day, and the 5 day. So we can see we got a green dot on the daily time frame first, then the 2 day, then the 3 day, then the 4 day, and then the 5 day. So these white lines just cover that range of the green dots. And then we did finish off the bull run. Can see we had lots of dots here on the 1 day time frame, so that was a little bit less accurate to use as a top signal. The 2 day had a red, a green, and a red dot. This would have got you out too early. The 3 day we had a red and a green dot, and then another red dot, and this one was a better exit. But I think the most accurate one here was probably on the 4 day chart. So we did get that green dot, we carried higher. And when we did get a red dot on the 4 day chart, that was after the peak around this little pullback here, but it allowed you time to get out on the second move up, which was quite close to the all-time high. And then we see the 5-day chart. The red dot was after both of these peaks. And again, that's the dots here, the 1 day to the 5-day. We saw that red dot on the 4-day on this pullback here. The 3-day was a little bit earlier. And the 5-day was after this second peak here. So now looking at the current cycle and comparing them, this was the mid-cycle pullback. We've started recovering here. This first white line is where we got a green dot on the daily, and this second white line is where we got it on the 5-day. But we will use the Heikin-Ashi candles again, and that just gives us these two white lines here. So using those same white lines in the current cycle, we can see that daily green dot came first, then the 2-day, then the 3-day, and then the 4 and the 5-day both got these green dots on the 7th of October. And so we're looking for a similar thing here as we finish off the bull run. And if we were to do a similar thing, we could look for that red dot on the 4-day chart. They don't have to be exactly the same, but we can start to get signs as we look from the 1 day to the 5-day with the red dots, and as they all start appearing within a range. So let's now do a similar thing, but when looking at the weekly time frame, look at the 1 week, the 2 week, the 3 week, and the 4 week on the market cipher, and see how those green dots responded going into the end of the bull run. So we can see here on the left, 2013 had that mid-cycle pullback. This first white line here represents the green dot on the weekly chart, and this second line here represents the green dot on the 4-week chart. And similarly here in 2021 had that mid-cycle pullback. This line represents the green dot on the 1-week chart, and this line represents the green dot on the 4-week chart. So let's look at market cipher. This first row here is the weekly time frame. The second row is the 2-week time frame. The third row, the 3-week, and the fourth row, the 4-week time frame. So 2013 on the left, 2021 on the right. So what we can see, this was where the mid-cycle pullback started here. You can see we got a red dot on the weekly, then the 2-week, then the 3-week, then the 4-week. And then we bottomed out. We started recovering from that mid-cycle pullback. We got the green dot first on the weekly, then the 2-week, then the 3-week, and then finally the 4-week with that second white line. Similarly on 2021 here, this was the mid-cycle pullback. We got the red dot on the weekly, then the 2-week, then the 3-week, then the 4-week chart. Then we started recovering. We got that green dot here on the weekly with the first white line, then the 2-week, then the 3-week, and now the 4-week, which has been confirmed on the Monday open. So now what we can see is we've just got marked this first red dot here on the weekly, and we'll see how accurate that was as a selling point near the peak of the bull market. So just showing that on the chart, we have the 1 week to the 4-week green dots with these first two white lines. We did peak out here on this third white line, and this dotted white line is the week that we got the red dot on the weekly chart. If we were to put it on the regular candles, we would see it got it after we had that bounce back on the second peak here. And 2021, we see the first weekly green dot here, and the 4th weekly green dot. So we can see on the 2013 cycle, we did only go on for another 3 weeks after that 4-week green dot. But this was a shorter cycle compared to the current cycle, so we could see it go on for a little bit longer. But I don't see it going past the end of the year. But again, we'll look on the daily time frames for those red dots first, and the weekly time frame as the nail in the coffin, so to speak. So we'll keep track of this as we head into the end of the bull run, and we'll use this as a guide, as well as the Pi Cycle top indicator and the RSI and various tools to try to get the top of this bull market. But it's never a bad idea to sell along the way. and spread out those sell orders as we get closer to the bull market top. And just one last chart now. This is the 3-week chart, and we're just comparing 2013 here to 2021 because they are very similar. And what we can see is this was the recovery from the stock market crash here and the start of the bull run. And this was the start of the bull run also in around 28th of May. And we can just see those first green dots here. This was the stock market crash. We started the bull run after that. And this was when we were way down at $5 and ended up at $1,200. So we do see that third white line here was around the mid-cycle pullback. And the fourth white line was where we started to finish off this bull run. But looking back here, what we can see is we both had these green dots at the same time on the 3-week chart. Then we did get a red dot here. We followed by a green dot, which we got earlier in the current cycle. Then we had the mid-cycle pullback here in May. And that was the red dot here on both charts. And then we got this green dot on the mid-cycle pullback recovery. And now we may get a similar red dot here at the end of the bull run. We do see that red dot here was after the peak, but it still was a decent time to sell during that 3-week period. So we can see, comparing the two, that they are very similar with the red and the green dots on the 3-week chart. And we can see what happened here after the green dot here on the 3-week chart. We did start going up quite quick and finish off the bull run. And we are looking to do a similar thing here. And again, that would put that red dot here around the 15th of November 2021. So I think that's about all. That was quite a long video. Hope you enjoyed that. We are seeing a bit of a pullback currently for Bitcoin here. And remember, my lowest target here would be the top of the daily EMA ribbon, which is currently at 50,800. But this will keep ticking up quite quickly here on the daily, because this is the 20-day moving average, the top of this yellow line. If we go back 20 candles, that's this candle here. So we did spend the next 9 days in this area, and being up this high, we can see that the difference here is quite a lot. So the price difference here divided by 20 is the amount this moves up daily. And currently that's about $600 per tick. So by tomorrow would be at around 51.3, and this should keep moving up quite quickly here. We also have a bit of support here on the VPVR from this previous action. We also have an order block on the daily here around 54.7 and one further down at 54.1. So we'll make another video in a couple of days and do a bit more analysis on the current price action. We can also see that we are topping out here at the top of this channel, and there is that VPVR resistance we talked about previously. We're also still in the 4-hour EMA ribbon here, and we see that VPVR here on the 4-hour and the 4-hour EMA ribbon, and that 236 level on the overall retracement, and the 382 level on the retracement from this low here to the high in confluence, and also near the bottom of this VPVR area of support. So we could only come down here on a pullback to around 53.8. But if we do break below the 4-hour EMA ribbon with a close on the 4-hour, then I would target the top of that daily EMA ribbon. So I think that's about all. Thanks for watching on Bitcoin Mamo. I'll see you next time. Bye.